Hi there, Kevin McNew with Quantum Hedging with our weekly model forecast. This will be the last one for 2025. We hope 2025 was a good one for you, and Happy New Year as we head into 2026. So what we see from our models this week is really what we've been seeing for the better part of the last month for both corn and beans, which is a corn model that really wants to favor a little more to the upside and a bean model that really has a lack of conviction. Just plain and simple. There's no kind of real directional guide that's coming out of our bean model right now because there's so many things that are mixed. Some are bullish, some are bearish, and they're just kind of washing out. So let's talk a little bit about what the forecasts are saying. For corn, last week, our corn model was 77% probability to the upside. We backed off this week to 63%. We did see last week's a 6-cent move in corn. That's a nice little move after beans have been taking it on the shorts for the last month. Corn did have a little bit of a positive move to the upside, closing the week last week at 450 for March, which has been kind of a challenging threshold to cross and get higher from here. So we'll see how we go for this holiday shortened week and see if we can make some action here. But right now our model is still pretty slightly neutral, I would say. That's really in line with seasonal. This time of year, seasonals are slightly bearish or slightly bullish, excuse me, here, a little more up and down at this time of the season. Based on what we've seen historically. And that's really where our model is. We backed off from last week's more bullish view to a more neutral to slightly bullish view right now for corn. The thing that is dragging corn prices down is gas prices and energy prices. Those are weak and have been kind of a headwind for corn to get any sort of momentum going here. The positive things that are affecting corn are really the ENSO cycle. And what I mean by ENSO cycle is the La Nina, El Nino cycle that we're all really familiar with in the grain markets. It's a metric that we measure water temperature around the equator. That's the standard metric that is used to look at whether we're in an El Nino or La Nina cycle. Now we're in La Nina, cooler waters. That tends to be associated this time of year with more stronger corn prices, more so than beans. Beans have some upside as a result of the ENSO phase being in a La Nina right now, but it's less clear, shall we say. There's a little more scatter, a little more risk to the downside versus corn. So corn definitely has more of a bias to seem to want to respond to an ENSO event like we're seeing now, which is La Nina-like. On beans, very neutral, very flat right here. There's just been, it's been a really hard time for the model to find anything to sort of grab hold of to say we need to either go sharply higher or sharply lower. Going back to October, that's when our model was flagging very bullish. We did see a nice run up after that bullish signal, but right now our last 6 forecasts have been very, very neutral and not much on the horizon right now to change that. The soy crush margin is negative for our market outlook because we've seen product prices come down. Meal and oil have come down relative to beans. So our soy crush metric that we use is showing us that is a bearish factor right now that is offsetting some of the bullishness that comes out of ENSO. So that's what we got this week. Holiday shortened week. We hope it's a good week for you and you're looking forward to an optimistic 2026. As always, we hope you will visit us online at quantum-hedging.com to learn how we can help you in the chaotic and crazy grain markets. Have a good one, everyone. We will talk to you in the new year.